Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, to discuss asset class and sector rankings. Chuck, it's great to see you as always. Welcome back to Trade Talks. Let's kick it off with U.S. equities. They have not moved much. They're still in the number 4 spot.
Yeah, I mean, when you look at the market over the last month, the S&P was up, just under 1%. So in looking at a chart, it's mostly just moved sideways. We haven't seen much change in the last month. U.S. equity still in the number 4 spot. That's out of 6. We have seen some marginal improvement, though, in just the number of signals that it has relative to other asset classes. So it's kind of inching closer to cash, which is at that number 3 position. And that's one of the things that we're really looking for. If it can overtake cash at number 3, that gets it back in the top half of the rankings. Obviously overtakes cash, which is a good thing. And it makes us feel, a little bit better about the asset class as a whole.
It's interesting because value still dominates the top of the rankings, but it feels as if large cap growth has really been what's contributing to the movement that we've seen in the market, particularly the Nasdaq 100, but value continues to dominate.
Yeah, that's right. And a lot of that has to do with what happened in 2022, right? Value far and away led that year. And so relative strength is picking up on some of that move as well. But we're starting to see, at least value erode a little bit from the top of the rankings. Things like small cap value have lost a number of signals over the last month. Not quite enough to change where its rank is at, but it has lost signals. And then finally, we're starting to see large cap growth begin to add signals at a decent clip off the bottom. It's still ranked number 8 out of 9, which kind of makes sense after the year it had last year. But, it's the first kind of constructive sign we've seen in our rankings that it could be on its way up.
And not much change with international equities as well, continuing to hold the number 1 spot.
Yeah. International has been very strong this year. If you looked at performance of all the different asset classes, international's the best out of all of them. And they've held the number 1 spot here for the last few months. And largely it's been a story of Europe. They've continued to dominate the rankings. Emerging Europe is at number 1, developed Europe's at number 2 in our regional rankings. If you look at the difference between developed market and emerging market performance this year, there's a pretty decent gap. I mean, developed markets are up, 11.4% through Friday, and while emerging markets are only up 1.7%. So if you're thinking you can just buy, any given area of international and do well this year, that might not be the case. You really have had to more focus on developed markets and specifically Europe. But one interesting thing, though, I will say as a caveat, is that we have seen Latin America start to reassert itself over the last month. It was the best performing region within those timeframes. And, that's something to keep an eye on. It was one of the better performers last year, too. So it will be interesting if it can reassert itself.
And how about fixed income? I was surprised to see it was ranked number 5.
Yeah, it's ranked number 5 in the asset class rankings. It's been doing well this year, relatively. Obviously, last year was, one of the worst years it's ever had. But yeah, still ranked number 5 in the rankings. We have seen, obviously some improvement there, but it's just going to take a lot more work for it to start moving up from where it's at right now. And right now you've got the 10-year yields kind of been range bound over the last month, between about 3.3 and 3.6%. So we just haven't seen enough movement to really cause it to move up. But even within those spaces, there's areas to look for. Things like high yield continue to hold the top spot in our kind of sub asset class rankings. And even though long duration treasuries haven't really started to move up yet, they are the best performer this year, and likely will continue to be if we see, kind of yields move flat to down.
And finally, let's wrap up with commodities, still ranked number 2, despite oil being down double digits for the month.
Yeah, oil had a really tough month, down about 16%. But that wasn't enough to change commodities rankings, still at number 2. And a lot of that comes from some of the other areas within the commodity space. So precious metals have been kind of the number 1 sub-asset class within commodities for the last little while. Gold was flat for the month. I think silver was a little bit down, but largely with gold flat and some of these other things, turning in relatively reasonable performances. it wasn't enough, or oil's kind of move down wasn't enough to shake off commodities from the top or the number 2 spot.
All right, Chuck, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.